now we can perform a loan amortization calculation. So the loan amortization schedule can be used, for example, if you have a loan or a debt instrument or a mortgage that you want to know how much you have paid so far and how much is outstanding at the end of the month. So say you have taken a mortgage on your house, you can use this. Of course, you can get a statement from the bank, but in the case that the bank does not send you the statement, or you want to confirm if the bank is correct, is accurate, the amount paid the bank is accurate, you can use this loan amortization schedule. So this is how an example of how you can do it. You need to have your loan amount, which is the amount that you borrowed from the bank. And then you also need to have your interest rate, which is the interest rate that the bank is charging you. And you need to have the periods, the period over which you are supposed to pay. I always prefer to convert this to months. So for example, if you are supposed to pay in 2 years, always convert that amount to 48 months. And then what we want to calculate first is the amount payable per month. This amount is per month. So I'll just bold this so that we know what we are working with. These are the inputs to our the first inputs to our calculation, basically. We'll assume maybe a loan amount of, say, we have borrowed 1 million rands. So I'll use rands for the purposes of this video, but it can be any amount. It can be any currency depending on where you are. Say the bank has told you that they will charge you 9.25% per annum. That's interest. For the purposes of this video, we are using a fixed interest rate. And then say they've said it's a mortgage, so you're paying in 25 years, which is 25 times 12 months in a year. So we are paying in over 300 months. And I always want to use, if they give you an interest rate per annum, I always want to divide that by 12 so that we can have the interest rate per month. Okay. So the next thing is now to calculate the amount payable. You can even use this formula to calculate how much your installment will be in the event that you are still doing your budget and you want to see how much you will have to pay per month. And the easiest way to get it is if you go to the formulas bar to the formulas tab in your Excel, and then you go under financial, and then you look for the one that says PMT, so that's payment, PMT. And then the first thing it's asking for is the rate, which is the interest rate, which you can just direct it. And then the next thing, NPER, the period, number of periods, which we said here is the total number of months, which is 300 in our case. And then PV, that's the present value. So that's the amount, the loan amount that you are getting, which is R1 million in our case. Future value, this is the amount that you want the loan to be at the end of your period. So since you're paying out your loan, this will be 0. You won't be owing anything. Type, this is whether you are paying at the beginning of the month or at the end of the month. Given that most of the loans that we get, they are at the end of the month. So I'll use 0, which means at the end of the month. Another thing that is just convenient to do is to change to put a negative sign before this the present value, so that the calculation, the output is a positive amount. So if we do that, that's not the amount that I expected. Let me just see why it is giving me a 7 70. That's okay. 9.25%. So this is supposed to be 9.25%. Let me see, because we are using an example of 9.25%, but we are saying this is over 12 months. So okay. So it's saying, okay, my Excel is set to work in dollars. So for now, we'll just work in dollars. But remember, you can change your currency to anything. So it's saying there $8,563.82 per month. That's what you are paying. So so this gives you what you'll be paying per month. But remember, banks will also charge you some admin fee, and in some cases they will also insist that you pay life insurance and all that, credit insurance. So you need to ensure you know what your payment includes. And in this case, this amount is just interest and capital. So for our loan amortization schedule, we just want interest and capital payments. The capital portion being the 1 million rand that you are paying, and then the interest is what they will charge you every month. So for you to see what your interest will be, that you'll be paying every month, let's just do the actual loan amortization calculation. What I'm going to use for this calculation is I will need the month. This I'll put it in here, and then I'll put an opening balance, which is basically what you owe at the beginning of the month, of every month. And then in this column, I want to calculate the capitalized interest, which is basically the interest that the bank would have charged you for that month. And then this, I want to put the installment in this cell, and then I will have the closing balance. So just to make it look neat, I'll just expand these cells and bold, and then just to make it look easier on the eye, I'll just maybe make this background green, and this one here. You can make it whatever you want. So in month 1, how much do you owe? You are saying how much is your opening balance? You're saying you haven't paid anything. So basically your opening balance is what your 1 million that you borrowed from the bank. This is basically your opening balance in that month. And then capitalized interest. So banks will first of all calculate the interest that is on the opening balance. So this is equal to your interest rate times the opening balance. So we are saying it's about 7,708.33. And then you pay your installment, which is basically this amount that you have calculated here. And then your closing balance is your opening balance plus capitalized interest less your installment. So this is equal to your opening balance plus your capitalized interest minus your installment. So basically that's what you owe after paying your installment for the first month. And then in the second month, your opening balance becomes what you owe at the end of the first month, which is this amount. And then we do the same thing. So just because we'll be using the same interest rate, which is on cell C2, I'll just freeze here so that this formula always refers to cell C2. Okay. And then installment also, we have calculated it's in cell C4, so I'll freeze here also so that this formula always refers to that amount. And then so if I copy this formula down like this, it will be automatically calculated. So I just want to expand my my months so that I can go up to month 300. which is the end of my my period, since we said we are paying over 300 periods, 300 months. So you can just drag down your formula, and then few series. So I want to be able to take my formula to month 300, which is the month that I'm expecting to finish my loan payments. And since I've already frozen these formulas, and so I can say my table is set already, I can just copy this formula down. And to show that my amortization schedule is working well, you see the closing balance after month 300 is 000. So which means I fully paid. And then just to add, and this is basically a basic amortization schedule, but just to add an interesting twist, I can also add amount paid to date. So this I just want to calculate how much of the capital balance, because we are saying in this installment that you are paying, the 8,563, there's interest, and you are also paying to reduce this capital balance of 1 million rand. So I want to see how much of that 1 million rand have I actually reduced at the end of month 1, for example. So I can say this is equal to my 1 million rand, which I borrowed from the bank, minus my closing balance, which is basically 855. But what I actually borrowed from the bank is fixed at 1 million. So I can freeze this formula, this cell, to this formula to always refer to this cell, and I can copy it down so that every month I can see how much I've actually paid. So in month 2, I've paid 1,717.56 towards the loan, and basically the rest goes to interest. And you can see as you are going, you are paying towards your loan. And here, if I just stop at, say, month 225 or 226, I've paid 518,420 towards that. And it's only at month 300 where I've paid the actual 1 million rand towards the actual capital. So you can then think of how do you want your table to look. Maybe personally I want to put borders just to make it look neat. But you would have calculated your loan amortization basically there. So yeah, that's it. That's how you can calculate your loan amortization schedule. And if you have any questions, you can put them in the comments section below, and we can maybe see how which formulas can assist with that. And maybe in the next videos we can address those questions. Thank you very much for watching.